What is going on, guys? It is Ahmed and I am back today with probably the greatest opportunity that I've spoke about on my channel. And I kid you not, I am very excited to share this with you guys because tomorrow is a day they will IPO via reverse SPAC merger. And it is Opendoor that is going public on the 21st, probably sometime when the market opens. So I think at this time, if you have not invested in Opendoor, and I'll speak about the price action and where they are right now, currently under the SPAC IPOB, then I think it's a must, because here is what the owner and CEO of the SPAC has to say.
Thanks for letting me do this
Let's
with
listen.
you guys. The news is that IPOB is merging with Opendoor, and Opendoor will be going public. This is the largest online consumer real estate business in the United States. It's doing something really incredible. And what I wanted to do was take an opportunity to give the viewers a sort of behind the scenes look at how we decided to do this investment. It's more than $1 billion. It includes ourselves as well as a bunch of very well-known other co-investors. And so I think it's important. First, I wanted to just take a step back for you and talk about what this whole craze around SPACs, but specifically what my goals were with IPO 2.0. The reality is that a lot of investors are really shut out from the growth that exists in Silicon Valley and tech businesses. But what I'm trying to do is really democratize that access, find these iconic businesses, help them get public, enable them to grow for long periods of time, and really help build a legacy business, because if we as investors can be a part of that, then we can basically share in those gains as well. So the setup is that. And so what we did was we started to look across a whole bunch of industries, and one industry that jumped off the page was consumer real estate. And the reality is that in the last 20 years, but even specifically in the last 6 months, everything that could be bought and sold online has moved online except that. And real estate is interesting because this is a category that touches every single American. This is the pillar of the American dream. 68% of Americans own a home. 32% probably want to at some point. 5 million homes are sold every year. This is the largest undisrupted market in the US. It's $1.6 trillion. But despite that, it's completely fragmented. It's low convenience. It's low trust. It's low NPS. And a third of the people in the marketplace actually only do it part-time. And so this is where we found Opendoor. And what they have done is something really incredible. And we think that they're building what we love to call a virtuous cycle. So how does this work? You as a consumer can now go to opendoor.com, and within 24 hours, they will give you an all-cash offer for your home. And if you choose to sell within 3 days, you can sell your home. It's a really incredible experience, and so you can start to understand how they can build a really powerful competitive moat. Because the more offers that they're able to make, the more homes that they will buy and sell, which means the more markets they'll dominate, which means the more value-added services that they can automate online. For example, mortgages, title, escrow, all these things where you used to have hundreds of pages of documents they can streamline through a mobile app. It also allows them to work with banking partners to secure large pools of capital at cheaper and cheaper rates. They can pass all these savings on to you, and all of that drives more demand to the business. Now, that's what got us really excited about the company, but then we took a step back and sort of Buffett and Munger language asked, what's our margin of safety? What can we rely on that allow online buying of homes to grow relatively unimpeded for a long time? And there are 5 really important trends that I think people need to understand. The first is that coming out of the global financial crisis, we've seen a massive underbuilding of housing supply. This is creating large housing affordability issues in major cities, and people are moving. The second is that because of the tax situation in America, the federal government eliminating the state and local tax deduction, state budgets in peril, taxes are going up, people are moving. The third, because of coronavirus, you can now work from home. Many people can work from anywhere, so they are optimizing for quality of life and they're moving. The fourth, you have 75 million Americans, digitally native millennials, who want to do everything online. They're starting to have families, they're looking for homes, and now they're stepping into the housing market. And then fifth, and probably the biggest accelerant on all of this, is as of a few weeks ago, the Federal Reserve basically told us that they're going to keep interest rates effectively at zero for a very long time. And we think that's going to drive an enormous amount of home ownership and the velocity. So when you put these things together, there's a really important trend that's happening in America, which is that the huge populous states like New Jersey, New York, and California are stagnating and starting to lose people. And these younger, cheaper, more dynamic cities are gaining enormous share. And these are the markets where Opendoor has already launched and is achieving scale. And so this is a business that we think is now very much proven and ready for prime time. They have 70% of the market, so these guys are the dominant leader, almost 4.5 times bigger than their next competitor. Last year alone, they did $4.7 billion of revenue. And 2023, these guys will do almost $10 billion of revenue. If you take the playbook that they have and you just apply it to the markets in which they can expand in the US, at 4% share, this is a business that will do $50 billion of revenue. And it's a merger that really creates an opportunity for investors. We priced this deal at 1 times 2019 revenue, but it's also an opportunity for Opendoor to raise the money they need, fortify their balance sheet, and really create more value and scale. So the last thing I'll say is I want to take a step back and just remind folks of, the times that I've come on, I've really tried to find asymmetric upside opportunities and present them to you, Andrew and Joe, and the rest of the viewers. And I really believe in this business. This to me feels like Bitcoin in 2012, Amazon in 15, Tesla in 16, Virgin last year. This is an enormous bet for me, and I think that Opendoor is going to build a huge, huge business.
All right, guys, that was a lot. So Chamath, again, he is the owner of the SPAC that is going to be merging with IPOB will be merging with Opendoor to make it go public tomorrow, December 21st. And I had to get this opportunity out there for you guys because, again, some of the things he mentioned was, again, Amazon in 2015. So let's look at the price target or price where Amazon was kind of lingering in 2015. $300 range. Again, 10x since that point in time. Let's go to Tesla. Tesla in 2012. Let's go back. Let's go max. Tesla in 2012. We're seeing numbers in the $5-6 range. Again, maybe didn't say. He maybe said 2000 something. Regardless, he's saying that it has potential for a 10x. 2016 is what he said. So again, about a 10x, a little bit more maybe of a potential there. And he also mentioned Bitcoin. We all know about Bitcoin and how it's kind of been going crazy. Pre-2012, again, it was, virtually versus the US dollar not worth much at all, and now it's at $23,500. Okay, so where does this put me? I talk about SPACs a lot in this channel, and I talk about IPOB. So I talk about SPACs a lot, and I talk about how post-merger there's always a price drop-off, or there's a sell-off that typically occurs. But let's look at the price action from the previous month. So again, between November 20th and today, the 20th of December, it's went up about 54% since its initial SPAC pre-merger news or everything like that. It was, of course, like any other SPAC is, around the $10 mark. So since then, it went up 170%. So where does that put it? At $29.50 a share. And this is, again, after hours, and we don't know what's going to happen in the pre-market tomorrow because that is the day it is going to IPO. What am I expecting? I'm expecting that before the ticker symbol changes to Opendoor, I think it's still going to be probably around the $30 mark. I hope we don't see too much of a runner-up Monday morning. But what does this mean for me is I want to start a position in Opendoor. I know the things that Chamath, he's a billionaire, he's a venture capitalist. This is something he does for a living. He knows what he's talking about. So listening to him and how much his price targets are for this post-merger of Opendoor, and because of the revenue potential that they have and how they're pricing it at 1 times the revenue for its initial market cap, I think that this makes a huge opportunity for us small guys. In 2012, I was merely a high school student. In 2015, I was, a broke college student. 2016, still, I was a broke college student. So I couldn't invest in these opportunities, even though I kind of saw them because all the things that I was hearing, and I was like, wow, excuse me. I was like, wow, these are some great opportunities. But I think right now, because of the price that this is at, I say we all start a position. Again, I am not a financial advisor. Please do your own research. on IPOB, on Opendoor. If you like the company, for me as a millennial that has just started working, that is interested in buying a home, I'll definitely be using Opendoor to see what I can find. We see things like Zillow, but this here, the fact that within 24 hours you can sell your home online, that is just mind-blowing to me. So again, please do your own research. Look into this SPAC before it merges on Monday the 21st, which is tomorrow. Please, 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 because the price targets that we are going to see, if it's going to be 10x to $300, you're going to regret saying, why didn't I put in just $1,000, just $500? If you have potential for 10, 20, 30, 40, 50x in your initial price. So don't be like the ones who said no to Bitcoin in 2012, Amazon in 2015, Tesla in 2016. Be the ones that said yes to IPOB or Opendoor in 2020. And I don't think any of us are going to regret that. So again, I'm just trying to put you guys on plays that I'm going into, things that I'm buying. And I think IPOB is a huge opportunity. Open a position, because I don't want it to be another laser where it skyrockets after it merges to the $40 range, because people are now realizing, oh, this company is actually legit. I want to start a position now. Buy pre-merger, see what happens, and average down. So you can do the whole, buy with 50% of the money you're willing to put into it. If it goes down, add more. If it goes up, wait until we see a pullback. That's always, always, always my strategy. You guys give it a go. Thank you all for tuning into this one. And let me know if you've already bought into IPOB before all the news, a few months ago. But if you have not, let me know what your price targets are. And again, until next time, keep investing.